RealAgriculture.com's coverage of the 2011 National Cattlemen's Beef Association meeting is brought to you by Haney Farms and Elanco Animal Health. So Greg, the longer I'm here in Denver at the NCPA convention, it seems the more and more bullish people are getting. CattleFax just gave a presentation this morning. They seem very bullish. You did an interview earlier this week with Dwayne Lenz. What do you think? What do you think the story's going to be?
Yeah, I think we're in an interesting phase here right now that we've seen this initial pop in prices and the initial natural reaction in our industry is, well, it's time to liquidate and get out. You know, we're not sure whether this is going to be here or not. And my reaction all week to this has been, guys, stop it. Look at the back end of the cattle futures market. Look at all these commodities in the deferred contracts. Live cattle in April 2012 is $118. That's all, record. We've never seen these before. So that needs to tell you, we just need to probably stop a minute here and think about how we plan longer term for what we're doing in this business. And the other issue that is, Brett Stewart did a great job of talking internationally today about, this whole thing in Egypt is about food. In Tunisia, it was about food. The Chinese are very concerned about food security given all of the increased caloric intake all over the world. Right now in the world, there is a shortage of manufacturing grinding beef to make hamburger and manufactured beef products. The world beef situation is really tight. The world animal protein situation is really tight.
Well, last year at this convention, you and I talked, and you said the story of 2010 was going to be exports. You were very, very right. What do you like? Do you think that story is going to continue when you talk about things that are going on in Egypt and Tunisia?
I actually think at these price levels, the story for 2011 will be volatility. I think that we're going to have to be prepared for some real wide roller coaster rides here in all of these commodities, the commodities in general, agricultural commodities, and even cattle. We're in a new paradigm of a lot of volatile things going on in the world. For example, we have one snafu in planting the U.S. corn crop. This thing could go crazy in the corn. Soybeans is tight. You're really wet in Canada. We've got the hard red winter wheat areas in Kansas and Texas is dry. You've got the worst dry weather in 40 years in wheat country in China. I mean, you just go on and on and on. There's lots of different little black swans all over the place here that could just really give us whiplash. And so I think that's the critical concern here. And you heard Randy at CattleFax talk at the end of his presentation about, despite all of this bullishness, for the cattle feeder and managing margins, it could still be really difficult to make money.
Higher prices don't mean higher profits.
That's how he ended his talk, and I think that's exactly right.
Yeah, because the more and more people you talk to here, and the same in Canada, is a lot of excitement about the prices. It's the cow-calf guy that is really, really excited.
Yeah, and he should be.
Yeah.
And he needs to begin to plan accordingly. And that's the issue is how long, one of the guys asked me, a good friend of mine asked me today, how long do you think it'll be before we really see more beef production in the U.S.? 4 or 5 years.
You think that long?
Yeah.
So what's going to happen in the meantime, guys? Are you just going to try to just reap the financial benefits by
yeah, right. The first phase is reaping the benefits, liquidating, bird in the hand, taking the money. The second phase is then retaining heifers, which takes more beef supply out of the process. When you retain the heifer, and then it takes 3 years when the decision you retain before you make the meat. So you've got that kind of cycle here now that we're going to come into.
I keep hearing from many people, the question, where are the cattle going to come from?
Yeah,
it is. We've known this is happening. Now with global demand increasing and being a good story, we've got some real concerns on the supply side.
And a huge thing that I saw just this morning that just really kind of makes me angry. And I've seen some rebuttals to it already. I think I'm going to do a little editorial rebuttal. Is Mr. Zellick, the head of the World Bank, came out in recent comments said we need to control food prices. Sir, with all due respect, hands off.
Right.
What the marketplace is telling us right now is they're signaling to farmers we want more food. And that's through these deferred futures contracts. Yep. That's the signal that's being sent. If you don't try to control it. Let the marketplace tell us and allow us to be profitable, and we'll make it. Don't try to control the marketplace.
From a beef perspective, I've heard a lot of people comment that we've seen, obviously, the price of beef is increasing at the farm gate, but it hasn't really hit the retail yet. Is that true?
I think that is really true in the United States, because what you're seeing here is you have to kind of disassemble and take this beef price thing apart a little bit. The drop credit, everything that isn't the beef, is at record high prices. The chucks, the rounds, the trim prices are really, really strong. But the biggest thing we eat in the United States, the biggest portion, is the steaks, the middle meats. And those prices are still really, really soft.
Why is that? Why aren't they going? Is it because of the economy?
Because of the economy. See, half the beef in the United States is consumed away from home, hotels, restaurants, etc. And when you have 9–10% unemployment, you don't have disposable income. People are eating out. So the demand for those steaks is still really, really soft. And so when I talk to ranchers, say, is this real, or is this just a one-off flash?
Is this hedge funds moving in or something like that?
The answer is, we could actually take these cattle prices from $105 to $115 if we had the domestic steak demand. Mm-hmm. So we've actually got some room to push steak prices at the wholesale level in the U.S. even a little higher if we had that better U.S. domestic economy. And I think that's the biggest thing that Americans are really struggling with right now from an economic standpoint, is they think the whole world is in the tank. And they don't really understand that the Asian economies are so hot, they're talking about raising interest rates to cool them off.
Yeah.
And we're just the opposite. And so it's hard for a lot of guys here to really kind of get their head around that.
Do you see the domestic economic picture getting better and some of the domestic demand rising this year?
I think that's the toughest thing to forecast, and I would answer no. I think we've got some enormous structural problems in terms of debt federally, enormous problems with debt at the state level, unemployment, a disastrous housing sector. I think we're just kind of wallowing around here for maybe a couple of years.